What's up, traders? This is my week in review. It's been another tumultuous week in the market. Let's see what's going on here. Let's go back to April here. After that really bad trade, I had to buy back this IWM a couple of weeks ago. I was down 34.40 on that. I was clawing my way back last week. If I go from all the way here to all the way here, I was only down 326 so far, and then with the trades I had done last week, that would have put me up 609. But I did have this other trade for SMCX that was starting to go against me. I had a call with the $40 strike price, and with the volatility in the market, I don't want to risk having these go in the money and get a call away from me, because it's my cost is like, I think it's $80 or something. Let's see. I'm trying to just make premium on this by selling below my cost until it comes back up. 74.51 is my cost here, so I'm down 25,000 on this. So now I would lose all this if these got called away from me. So I decided to just buy this back. But with SMCX, I started trading this, I think, back in October here. I made 130 in October, made 670 in November, December, made 695. January, I made 720 here, 900 here. February, I made 54.60 and 5,000. In March, I was down 720 here, down 760 there, up 1,040 there, and up 1,270 there. Basically, it all adds up to about, I think I was netting 15,000 on all the trades that I've done so far. So I'm still up on SMCX, and I'm not too worried about this. I'd be more worried about having the shares called away from me at 40 when my purchase price is 74.51 than anything else. So I'm happy to kind of just close this out. I might just lay low on SMCX until things kind of come back up. And the market has come back up quite a bit. The whole market this past month was down as far as 126 for me, for my account. And total account right now is up to 148 and some change. So things are looking up a little bit. I think people are just really wanting to buy some bargains while the tariff stuff is on pause, and so that's pushing the market up a little bit, but there's still a lot of volatility. Good thing is that my Amazon leaps that I have at 180 has gone back up. Amazon has gone down as far as the past month. It's gone down as far as 165, so that's back up, and I can sell covered calls against my leaps, which I'm doing here. So I did this 205 call, and it's pretty well safe here. At the current price is 189.20. The delta right now is 16, so that's pretty safe. That'll probably expire worthless on 5/2, and I've got two contracts at 108, so I made 216 on that. Let's just go over all the trades I've done so far this week. Last week, I think we left off at line 30, this NVIDIA trade. I did a buy to close on that. It's below cost. Actually, this is a put. So I think at the time I did not want to get too overexposed, because I already have 200 shares of NVIDIA, and I didn't want to overexpose myself. So I closed this out at 272 and netted $52 on that. These other ones that are in pink that I have, I've got them colored that way because I'm selling below my cost. So got to be super careful. This TNA, 500 shares or 5 contracts at a strike of 24 started to go against me. So I bought this back for 150 after collecting 25. So I'm down 25 on that one. This NVIDIA call, 200 shares. It's below my cost. I collected 80, rolled it out. So I had to buy this back for 122. Netted 42 there, but I rolled it out to, looks like here, and collected another 94. So technically I'm up on that. This SMCX, like I was just talking about, had to buy that back. Didn't really have to. It actually went down, but I get super nervous based on a couple of weeks ago when Trump made that announcement and everything shot way the hell up. And if the volatility is super high, like on that day, this would have been a lot more. So I don't want to get stuck having my shares called away or having to buy this back for a huge, massive amount. Anyways, TQQQ had a strike price of 59 here for 3 contracts. Collected 156. Price started going against me. As you can see, as we discussed, the market started to climb and go past my strike prices. So I bought this back for 171 and ended up with minus 15 there. I did an IWM put for 100 shares. Collected 83. Bought that back for 4 when the value had gone down to almost nothing. So that was good. Collected 79 there. I'll take it. NVIDIA, this is one that rolled out again. Collected 94 on that one. TQQQ did another trade. This time, instead of same price, I guess, 59. The delta is pretty safe at 16. That's in process. Collected 156 there. And this Amazon, again, I'm selling against my leaps at a strike price of 205. Safe delta at 14. It's in process, and collected 216 there, and that's in process. Looks like I had this IW in there twice, but as it sits right now, I'm down minus 1,012. So I'm down for the month. I've added in my dividends that I've gotten for. I've got some high yield covered call ETFs like JEPQ. I collected so far this month 66 for that. Then I've got SPY-I, 205 shares, and IWMI. Collected 94.68 for that, and 105 for that. So I've got those in there. Interest so far, 50.70. I do have my kids trade. Let's look at that. I did a buy to close on this $10 strike price, expiring 425. Bought that back for 1304. Looked like the price was going to go against me, and I didn't want to have to cough up $1,000 for this. So pretty much just, it's kind of like a roll. Bought to close this one for 13 and rolled it out for 33. So the total for this month for my kids trade with their $1,000 account is 65.88. If I can coach her on how to do this every month, 65.88 times 12, that's 790, divided by, let's just say 1,000 is the account risk. It's some average of all these, but let's just say 1,000. That's a 79% return. So trying to teach her the value of that, and if she had a $10,000 account, this would be 658.80. So she would make 658 per month, and we'll just scale this up as things go on. One thing I've been looking at is I've been selling Amazon calls against my leaps when the leaps are above the strike price, which happens now at some later date. This has a long time to go to come back up. I might roll this out and down. But one thing I'm looking at is maybe doing in the money covered calls. So if I did AMZN, I've been selling calls kind of like you would normally do and have your strike price out of the money a little bit. So like right now I have 205, 2 contracts, premium is 123. But if I went in the money a little bit or right at the money, I could make 720 and then just wait. And depending on where the stock price is at the time, I could just keep rolling this. So I'm looking at that. I'm going to try to watch it on paper for a while and see how that would work. But it might be a way to collect more premium on this. It's kind of thin. There's not much meat on the bone with the way my leaps options have gone. These IWM options are below my strike prices, so I'm going to avoid trading calls against these until that comes back up. And I'm thinking about rolling these down, but I've still got a long way to go for this to expire, so I might just let them sit and actually just kind of want to lay low a little bit more because of the volatility in the market and the way tariffs and things are going. it's good that things are back up in the market. But I'll just keep plugging away with kind of the strategy I have been doing to make a little bit of premium on stock that I own, even though I'm selling below my strike price, and just keep a good eye on them. But I gotta avoid having losses like this per month. My goal is to make at least like $1,600-1,800, which is about the amount of rent I was collecting on the condo before I dumped all that condo money in here. So I gotta make it pay at least as much as what my condo was bringing in with the free and clear rent. So anyways, that's it for now. That's my trades and that's my week. If you got any questions, please post a comment, and I hope you got some value out of this. If you did, please like and subscribe, and we'll see you on the next one. Thanks a lot. Bye.